how to do the maths and a very little bit of journal entry. So component depreciation. So you can think of a huge asset like a submarine or an aircraft, or you have an asset that has different components and you can define different parts with different life. So GAAP says you need to do one calculation, one depreciation. On the other hand, IFRS says you must need to do this component specific depreciation. So I'll try to do the calculation here. Calculation is simple, but I'll show you the journal entry. So the problems now I'm going to do is number 20, and the question is asking to do it for 2 years, but let's do it just 1 year. What time is it? I think we'll finish it. Okay. So let's read it. Surat Limited paid cash to acquire aircraft on January 1st. It's an Indian company, that's the currency rupee. So they purchased an aircraft, they paid 30 million rupee. The entire life is 40 years. No salvage value. We're gonna do the straight line depreciation. No salvage value. But they determined that the aircraft has 3 significant components. These are the components: fuselage, engines, and interior. And these are the costs. And for each component, you have different lives. So now let's see what should be the depreciation, component depreciation under IFRS. I'm trying to do it here, IFRS depreciation, because it's very small math. So what we just learned from this chart, that IFRS says if you have this type of big assets and you have different components, different lives, you're going to do the component specific depreciation. So can you do it? Do these 3 components. You have costs and you have lives, a straight line. So do the component, first component, fuselage. So what's the depreciation? 10 million divided by 40,000. What's the depreciation for this component? You need to divide it. 10 million divided over 40. What's the depreciation amount?
150,000.
So for the first component, your depreciation is 250,000. What's the second component's depreciation? Engines, 15 million over 30 years. 500,000. What's the third component? Interior, 5 million over 20 years. 5 million over 20. 250,000. So you know you have 3 major components. You can identify their costs and lives. So IFRS tells you to do this component specific. Once you do it, what is your total depreciation? Just add it. How much? 1 million. So under IFRS, your annual depreciation is 1 million. This is IFRS depreciation. Now, how about US GAAP? US GAAP says you could calculate only one depreciation. So can you calculate this depreciation if you follow US GAAP? So let me do it here. If you follow US GAAP, so you will calculate only one depreciation. This is your total cost. And what is the entire asset? That means entire aircraft's estimated life. It's 40 years. So you know the cost for the whole asset is 30,000 and the entire asset's life is 40 years. So your US GAAP depreciation will be 30 million over 40,000. So what is US GAAP depreciation? Go ahead. Yes? 750,000. So you see, just because you are using 2 different standards, you have different expenses. This is your US GAAP expense. This is your IFRS expense, right? 250,000 rupees. We are doing that company's perspective. Now, this is very simple. Now, can we show the journal entries quickly? And we will do one extra new journal entry. This is called the conversion entry. What if you need to convert either from GAAP to IFRS or IFRS to GAAP? Let's do the journal entries. So, they purchased it here in 2017, what should be the journal entries that the company will record? Let me see some paper. So first you will do the journal entry for purchasing the assets. Okay, so let me do it here. So when you purchase the asset, what is the journal entry? I will do both methods, IFRS and GAAP. Not a huge difference. Let's try to do it here. They purchased it on January 1st. Let's try to do it here, IFRS, so that I can show it both back to back. And here I'm gonna show it US GAAP. So first do the journal entry for purchasing the assets, IFRS. So on January 1st, 2017, they purchased the asset. So very simple. Assume they paid cash. So you will write it down, aircraft debit, cash credit. So how much they paid? They paid total 30 million. These are all in rupee. Don't worry about the currency value. Right. That's the first journal entry, IFRS, according to IFRS standard, the company will prepare. Now at the end of the year, December 31st, they're gonna record the depreciation. So, you know how to do the depreciation journal entry. We debit depreciation expense. Depreciation expense, we credit accumulated depreciation. Right, accumulated depreciation. So who can remember the depreciation amount under IFRS? It's already here. 1 million. So you're gonna do here debit 1 million. Sorry, I don't have a space, but I hope you will write it correctly. Credit 1 million. Right, that's the IFRS depreciation journal entry. How about the US GAAP journal entry? So US GAAP journal entry, definitely debit credit items will be the same, only the depreciation amount will be different. So January 1st, again, US GAAP, under the US GAAP standard, you're gonna debit aircraft, and it's a cash purchase, you will credit cash, so it's the same amount. The only change will happen when you are recording your depreciation expense at the end of the year. So you will debit depreciation expense, that is the standard journal entry, depreciation expense, you will credit accumulated depreciation. So I'm writing in short, accumulated depreciation. Hope you'll understand. So you're gonna debit depreciation expense, you will credit accumulated depreciation. Now who can tell me the number here under US GAAP? 750,000. Right. So now up to this everything is very simple. Only difference here happens under the depreciation and accumulated depreciation expense. Now you need to know one journal entry. What if the company is using the IFRS? I mean, it is the requirement here. If you read it, you need to prepare the entry to make its conversion from IFRS to US GAAP. So, what if the company is converting from IFRS to US GAAP? So that means currently they are using IFRS. Now they want to convert it from IFRS into US GAAP. So now we will do one conversion entry. So our goal is to reflect these numbers, US GAAP numbers. Now look at the IFRS numbers. So depreciation expense. Under IFRS, depreciation is higher or lower? Under IFRS compared to GAAP. Under IFRS, depreciation is higher or lower?
Higher.
Higher by how much? Higher by 250,000, right? That means if we need to convert it from IFRS to GAAP, we need to reduce our depreciation. It is overstated. As per IFRS, we need to reduce it. So reduce means we will do the opposite things. That means we will credit depreciation because our goal is to show this number, 750. Currently it's 250 higher. So we're going to credit depreciation expense. It's just the difference, 250,000. And the same thing we're going to do with accumulated depreciation. Under IFRS, it is actually overstated. 1 million is under IFRS, but according to GAAP, our accumulated should be 752. That means we need to reduce it. Remember, accumulated depreciation is a credit item. It's a contra asset. So to reduce it, we're going to debit it. So we'll just do the reverse. That means we're going to debit accumulated depreciation. That's it. So that means the company was using IFRS. Now they want to use GAAP. So this is the conversion entry. So if you do this entry, that means after adjusting this entry and the conversion entry, their financial statement will reflect the GAAP numbers. Yes, please.
And if you had to do that for a number of years, you would just multiply it.
You will do it accumulatively. And you need to do one to your retained earnings too. Because these expenses apparently will understate 17's retained earnings. So retained earnings is cumulative. That means it will have an impact in 18, 19. Then next year, of course you're going to do it. For this, again, you need to do one adjustment for retained earnings. Good catch. You don't have time. That's why I'm not showing the second year, because I want to do one entry for R&D, research and development. Is it clear? Not difficult, because I really wanted to take some journal entry problem just to balance, because some students will not do well on multiple choice questions. So that you have some balance leverage to do this small calculation. So now let's do one R&D problem. And that problem will also be on your exam. That is problem number 23. So again, R&D. If you look at the criteria, I gave you these exhibits. So if you look at the criteria for R&D, except for some computer software, in USA you have to expense the whole amount. But if certain criteria are met under IFRS, R&D you could capitalize it, or a portion you could show it as an asset. That means you have a chance to reduce your expense under IFRS. So let's read this one. So here, this company, Mumbai AB, spent 1 million kron in 2017 for the development of a new product, and it determines that 25% of this amount was incurred. This is IAS 36 standard. That standard, IAS 36, actually tells about the criteria that you need to meet, whether you're going to call it as an asset or you need to capitalize it. So 25%, this is the total amount, 1 million they spent for R&D. Kron, don't worry about the unit, it's not dollar, because they are an IFRS country. So 25% makes certain criteria, IAS 36 criteria. That means 25% of this amount you can record it as an intangible asset. Now, they will bring the product in January and they have a sales revenue for 5 years. This is important, because under IFRS, you are showing a part as an asset and you know the life. That means you may need to calculate your amortization when the product will be in the market. But now we're going to calculate the R&D expenses under IFRS and GAAP, and then we're going to convert it from IFRS to GAAP. Again, we are assuming that it's an IFRS company. They want to convert it into US GAAP. So now let's do this, number 23. So who can tell me what will be the R&D expense under IFRS? Let's do the IFRS first. Under IFRS, total amount they spend it is 1 million. and then they say that 25% of it, which is 250,000, that met the IAS 36 criteria. That means these 250,000, you could show it as an asset. You could show it as an intangible asset. So under IFRS, what will be your R&D expense? R&D expense will be the rest. That means 1 million times 75%. So under IFRS, your R&D expense will be the 75% of your total cost. That's your expense. Since one quarter at 25% made certain criteria, so this amount you can call it as an asset. So this 25% we will call it as an asset, 250,000. This is an intangible asset. That's under IFRS. How about US GAAP? Who can tell me US GAAP? It's not a computer software. So what does GAAP tells you? GAAP tells you you have to show it as an expense, the whole amount. So under US GAAP, you cannot capitalize any amount. You cannot show anything as an asset. So the whole amount will be your expense. So under US GAAP, it will be your R&D expense. That means the entire $1 million will be your expense. You will not have any intangible assets under US GAAP. So the whole amount will be an expense. Now, can we do very quickly the journal entry? First, let's do the basic entry, then we'll do the conversion entry. So here, I'm trying to fit it here, IFRS journal entries and US GAAP journal entries. Let's do it here. So IFRS, first you have to show the R&D expense. How much is R&D expense? Who can tell me? This is an expense, R&D expense. Expense is always debit. How much was the R&D expense under IFRS? Quickly. 750. So you're gonna debit R&D expense 750,000. And then you created these assets. So we debited R&D expense. Now we will debit these intangible assets. So the rest we will debit it as an asset, intangible asset, which is 250. And we assume you paid cash. For this R&D expense, you just paid cash, so we're gonna credit cash, the whole amount. This is your IFRS journal entry. Is it clear? So we showed 75% as an expense. Expense is an debit item, and the rest 25% we showed it as an asset. Asset is also a debit item. And credit cash because we paid cash. Now who can tell me the US GAAP journal entry? Who can tell me the US GAAP journal entry? Quickly. Yes, Noah.
R&D expense, $1 million, cash.
Nick, is it right?
Yeah.
Noah says R&D expense 1 million, the whole. Very good. The entire amount, and you are paying cash, the entire amount. Thank you, Nick and Noah. So this is your US GAAP. Now they say you have to convert it from IFRS to US GAAP. That means we already have these IFRS numbers, but we want to show like this, US GAAP numbers. How could you convert it? First, let's see the R&D expenses. IFRS expense is understated. Right, so we need to increase this expense because I want to convert it into GAAP. So I want to see this GAAP journal entry or GAAP reflection. So first thing, look at the expense. Cash is fine. We don't need to do anything with the cash. But look at the expense. Expense is understated. So we need to increase expense. So the conversion entry, we have to increase R&D expense. It was understated by 250. And what else you need to do? Under IFRS, you created this intangible intangible assets. But US GAAP will not allow to record any part of it as an asset. So you need to get rid of this asset. You need to remove the asset. Asset balance is a debit balance, so you need to remove it. So we're going to credit this intangible asset. And this is the main learning today, this conversion entry. Look, now if you adjust this and this journal entry, it will show this number. Assets are cancelled out. Debit, credit, R&D is increased. So your R&D will be $1 million. Cash is fine. We don't need to do anything with cash. Is it clear? This journal entry, I just tried to figure out